Good afternoon, everyone. Welcome to our final webinar series for 2014. My name is Catherine Baxter. I am your moderator, been your moderator all year long, and hopefully you're going to enjoy our final web series for today. It's a very good topic on internal controls. Our host for today is going to be Vanessa Lowe. Vanessa is one of our economic development specialists at the Office of Small Credit Union Initiatives. So before I get into the program and turn the console over to Vanessa, one thing I want to do is give you some administrative announcements. First of all, we want to make sure that you adjust the volume on your console, or your computer rather, so that you can hear this webcast. And if you need to resize the slides at any time, you can just drag the bottom right corner of your screen to do so. Now, from this website, you need to allow pop-ups. You'll notice, too, that there's an Ask a Question feature on your console. So what we'd like to encourage you to do is to submit your questions throughout this webcast. As a matter of fact, we have three speakers, Vanessa Lowe, and she's going to announce her other guest speakers today. Please put that person's name in your question so that we can make sure the right person gets the question. And also, remember, we always like to have you do a survey for us at the end of the webcast because we really like to get your opinion on our web series. As always, in approximately 3 weeks, this event will be closed captioned and archived for on-demand viewing. This final web series that we have today on internal controls also is going to feature a test and a certificate. Vanessa Lowe is going to give you information on that right now. So I'm going to turn the console over to Vanessa. Vanessa, you have the comm.
Thank you so much, Catherine. This is Vanessa. I'm so excited to be here today and to share with you our speakers talking about internal controls. As always, let me start with the NCUA disclaimer. We have been doing these webinars now, one webinar a month for about 2 years, and our intention is to offer you information and education. This is the sole purpose of offering these. We are not endorsing any particular credit union, vendor, their employees, products, or services. But we do have 2 guest speakers on the webinar today, and we're excited about that. All right, let's keep it moving. So what we're going to cover today, I am going to be interspersing some information about the Office of Small Credit Union Initiatives resources. One thing I'm going to talk about is the Supervisory Committee modules, and we'll talk about that in the beginning because it's very much related to internal controls. I also have an announcement about the 2015 grant round and when that will be open, and I'll give you that in between our 2 speakers. And then at the end, there's another couple of slides about our resources, including a new resource called the Credit Union Service Providers Resource. The first speaker is going to be Joette Colletts of CUNA Mutual. They've been a wonderful partner to us, and she's going to talk about how to lock in effective internal controls. And then our second speaker will be Scott Butterfield, and he will close us out with some ideas on some common internal control weaknesses and how to overcome those. As always, the last 30 minutes of the webinar will be a Q&A session. So as Catherine said, please start submitting your questions now, and you can submit them at any time during our presentation. So now let's look at, it's always nice to have the faces to go along with the voices that you're here. That's my face. I'm Vanessa Lowe. I'm an Economic Development Specialist with the Office of Small Credit Union Initiatives, and I've been with NCUA for about 6.5 years. Before this, I was with the U.S. Treasury Division's Community Development Financial Institutions Fund. All right, Joette, let's hear from you.
Thanks, Vanessa. Tell you a little bit about myself. I've worked in the risk management department at CUNA Mutual Group for 30 years, and for the last 8 years, I've been managing the risk management consultants throughout the country that are available to conduct either virtual or on-site internal reviews at your credit unions if you're a policyholder at no additional cost, among other reviews for your credit union. Prior to managing the consultants, I was myself a risk management consultant for over 20 years visiting credit unions. I have extensive expertise in detecting embezzlements, along with helping credit unions implement good, effective internal controls to prevent the embezzlements from occurring in your credit unions.
Thank you, Joette.
You're welcome.
And next, let's hear from Scott.
Thank you, Vanessa. Scott Butterfield. I am a credit union professional. I've been working in credit unions since 1985, and for the last 6 years have been out on my own as an independent consultant, working with mostly medium-sized and smaller credit unions, not only with internal controls but other compliance issues. And so today I'll be talking about some of the common issues that I see as I'm actually visiting and inside a credit union shop. And also, as a side note, I frequently get the opportunity to work with the economic development specialists at NCUA, and I've got to shout out to Vanessa that it's an incredible group of people. I'm always honored to work with them, and I get to see all of the great work your colleagues do out in the field with credit unions.
Thank you for that, Scott. All right, now on this webinar, and I think we've only done this maybe once before, maybe it was for the BSA webinar, we are offering you a certificate of completion, okay? Now here's the thing, in order to get this certificate, you have to participate in the entire webinar, and you have to answer, try to answer all of our poll questions. They're strewn throughout, but you have to answer at least 3 of the 4. And when we talk about the quiz, there will be a quiz at the end, and we'll tell you about how to log into that and take the quiz. You have to get 12 out of the 15 questions correct. So these are the requirements in order to be able to see a certificate and print it out. These certificates are really fantastic. It can be part of the material that you might encourage your board members or new staff members to go through as part of their training to prove that they have gotten at least some level of knowledge about these different areas. So we're happy to offer that to you on this webinar. All right, let's jump right into our usual first poll where we're trying to gauge the diversity of credit unions that are participating. Please, right now, use your keyboard in order to click one of the buttons to identify the size of your credit union. And if you're not a credit union, there's not an option there, so just don't click anything. All right, I'm going to click the poll result, and let's see how the numbers are coming. See if we get refresh. All right, Catherine, you think we got enough responses?
I think we do. Just to remind everyone to use your keyboard. Don't send a reply via ask a question.
Right.
Use your keyboard to answer the polls. Thanks.
Thank you for that reminder. I'm going to refresh one more time, and now I'm going to push the results to the audience. Okay, so the largest group seems to be greater than 10 million, but less than 50 million. I think that's our usual largest group. Nice to see that we have participants throw from all ranges, including those that are less than 1 million, that's 3.4%, and greater than 250 million, that's about 30%. So great. Welcome, everybody. I hope you get something out of this webinar. All right. I want to start here by giving a shout-out or another recommendation for everybody who's associated with credit unions to view NCUA's Supervisory Committee training series. It's in 6 modules. All the modules are less than 10 minutes, and what it does is it provides a wonderful overview for what the responsibilities of the Supervisory Committee is. The reason that everybody should look at it is because the Supervisory Committee is really supervising the whole credit union, and so it's kind of an audit team for the credit union. And so managers, staff people, board members for sure, everybody should be using this. The way it's related to our topic today, internal controls, is that it actually walks through how to use the Supervisory Committee guide. And I know a lot of people have seen that, and it's a pretty massive document that NCUA has put together to provide guidance on how to do the tasks that are required of a Supervisory Committee, particularly reviewing management activities. In that series, and particularly on Module 2, it talks about how there's a section of the guide that has a whole list of how do you check for internal controls on various areas, internal controls related to cash, internal controls related to lending, and a lot of other areas. So I wanted to encourage folks to look at that series if they have not done so already. You can find it on YouTube. It's also available on our website, but it's probably easiest to go to YouTube and search for NCUA Supervisory Committee Training or Series. All right, that's the first commercial. Now I'm going to turn it over to Joette to go into her presentation. Joette?
Thanks, Vanessa. Let's begin with the definition of internal controls. Internal controls involve everything that controls risks to your credit union. In this presentation, everything we're talking about today, keep in mind, it's important to everybody on this line, whether you're an employee, whether you're on a supervisory committee or a board member, any employee or volunteer of a credit union. I always say trust but verify. It's important that you hire employees that you find trustworthy, but you will also want to verify that trust has not been broken. In addition, verify that the internal controls are being followed. Take steps in advance. Take steps in your hiring process to check the background of any prospective employee as a condition of employment. Some of the things that you should take into consideration are their bondability with CUNA Mutual Group. Are they bondable? Prior employment, verify what they say is true. Educational background, a credit check, FBI fingerprint checks, just to name a few. You also will want to ensure consistency of all of your internal controls. It will be important to you that all employees are following the controls you implement. And what sometimes credit unions may forget about is verifying that these controls are being performed at the branches too, that there's not a breakdown from the main office to any of your branches. You'll want to ensure that the internal controls that are implemented are followed. In case an internal control has been circumvented, it is found early to prevent a loss or a larger loss to your credit union. It's important to work with your supervisory committee, internal auditor, or external auditors to ensure that regular audits are completed. Since the majority of claims filed by credit unions come through our doors at CUNA Mutual Group, you will find these statistics show that effective internal controls are a must. Employee dishonesty losses are due to ineffective controls, controls either not in place or not being followed. As you can see through this chart, almost half of our claim dollars under the Fidelity bond are paid to credit unions for these losses. Employee dishonesty is not a frequency issue, but indeed a severity concern. As you can see from this chart, 14% of our claims, that's a claim count, are for employee dishonesty losses, but the claim dollars, as I mentioned before, is almost half of the claim dollars paid out are due to employee dishonesty. To help you implement critical and effective internal controls in your credit union, my plan today is to focus on the internal controls that through our claims experience at CUNA Mutual Group are the most frequently found to be neglected. And it's the most simplistic of the controls. It's nothing complicated. So those are the controls that I'm going to focus on talking about today. Some basic safeguards that you will want to consider are to incorporate all of your internal controls into your written credit union policies and procedures, review them annually, and make sure that they are reviewed and approved by the board of directors as well. Segregation of duties. Most transactions can be broken down in the following 3 steps. The origination of a transaction, the posting or processing, and then the audit. one employee should not have complete control over that entire process. Something else that we recommend to credit unions, and I know sometimes it might be difficult with the smaller credit unions, but a compulsory consecutive one-week vacation, because this forces individuals to relinquish their duties to someone else, at which time irregularities or unauthorized manipulations may surface. Along with detection, the Compulsory Vacation acts as a deterrent, and it will discourage, hopefully, employee dishonesty. You'll want to think about the most basic of safeguards that are critical to your credit union. Exercise a culture that internal fraud will not be tolerated, and internal controls must be followed without question by everyone. Separation of duties in the loan process means one individual should not have the authority and or capability to approve a loan, process the loan, and also disperse the check. This would make it easy for that individual, if they had all of this access, to create a fictitious or unauthorized loan. Rotating duties has both internal control and cross-training benefits. Not only does cross-training provide substitute staff when regular employees take vacations or are absent, but it also can alert management to the questionable and possible dishonest acts of employees. What you implement should be in writing and read and understood by all. Set the tone from the top. It comes from the board of directors. It comes from upper management. Implement a fraud policy and a whistleblower policy. There should be a safe and discreet method without retaliation in which an employee can report suspected fraud or someone that's not following the proper internal controls that you expect them to be following. A fraud policy sets the tone from the top from management. Implementing a fraud policy will help you deter employees from circumventing the internal controls as well as committing fraud. You'll want every employee and volunteer to sign it, and not just when they're hired or when they just become a board member, but updated annually, because the employee's going to read that on an annual basis, so it's going to help deter fraud from occurring and also help you in case you would have to terminate an employee for a fraudulent act. And again, I do want to stress that everybody should sign this. It should be, all volunteers, supervisory committee members, credit committee members, board of directors, without exception. As I always say, fraud does not discriminate. Anybody can commit fraud, unfortunately. We do have a sample policy in our Protection Resource Center as well. I'm going to turn this over to Vanessa now. She's going to talk about a survey.
Yes, so we have a poll now. If everybody could once again respond to this poll. And the question is, do you have a fraud policy in place? Options are no, yes, but no signature is required, yes, but the employee only signs when they are hired, or yes, employees sign annually. I don't know is also an option, or not applicable because I'm not with a credit union is an option. Please choose one of those options now and use your keyboard. Don't try to email us an answer, okay? All right, so I'm going to try to refresh. Catherine, what do you think? You think we have enough responses?
Yeah. How about maybe about 15 seconds?
All right. So this is a really good question. It's one of the most important issues related to internal controls. So we want to bring home the point that, again, you don't just want to have the fraud policy, but you really want to make sure that there's a time each year when you're talking about it and making sure that people are signing that document again. All right, the preview window. Push the audience. Okay, I think I know what's going on. I'm going to push the results to the audience. Okay, so looks like most of you say yes, and employees sign annually. That's really great. But 24% said yes, employees only sign when they're hired. And about 8% said you don't have one at all. So that'll be one of the first things you work on once you get off this webinar, I hope. All right. I'm going to turn it back over to Joette to talk about teller operations.
Thanks, Vanessa. I want to start with currency that you would receive from Armored Car Service, or if you do bring currency back from a bank. That currency should be verified immediately by 2 credit union employees. The cash bundles through verification should be broken down and each bill counted individually. It should then be turned over with a signed receipt to one of those employees and stored under that employee's exclusive control, and that employee would be the only one that would have access to that cash, or an alternative, and what we find in most credit unions is currency may be stored under forced dole control. And I really emphasize forced. What that means is that if your vault has a combination only, the combination should be split. No one employee should have the full combination. Now, if your vault or money safe has a key in combination, the employees assigned a key should not have the combination. This is so there is no way one person has the ability to access the vault cash alone. This will ensure dole control of the vault cash. Tellers responsible for cash should be provided individually lockable containers. Each employee receiving currency should immediately count it to verify accuracy. And as with the cash shipment and vault cash that I talked about, bundles should always be broken down and each bill counted individually, and both supplier and recipient should sign the transaction receipt. Tellers should place their currency in their individual lockable drawers under their exclusive control. And you want to make sure that each teller has its own key for their drawer. Internal control of teller cash drawers would be null and void if one key opened up all drawers. And I found that sometimes when I am visiting credit unions, that same key opens up all drawers. So you want to make sure that there's individual drawers, individual keys for each drawer. And also what's really important, too, if a teller leaves sight of his or her station, they should lock the drawer and take the key with them, even for a brief moment. You know, that's when the control can be circumvented, just a brief moment that person leaves sight of that drawer, gives somebody else the opportunity to slip in that drawer. Lockable doors, gates, and other devices should also be used to restrict unauthorized persons from behind that teller area. Nobody needs to be behind there but the individuals that are supposed to be behind there, your tellers. Persons allowed into the teller area should be known or properly identified before entry, and as I said, they should have a reason to be back there. You'll want to be sure as well that that door or gate is kept locked at all times. And I'd suggest, you know, as a manager or supervisory committee, you know, you walk by and you can, like, you know, check that door to make sure it's locked, or, you know, check a teller drawer that they didn't leave sight of that drawer and leave it open. Tellers should have exclusive control over their keys or combinations. They should keep their keys in their possession, even when they're away from their workstation. And it's important, too, that all spare keys or combinations for individually lockable cash containers are placed in an appropriately labeled and sealed envelope, and it's by that employee that's accountable for that key. The employee's signature should cover the envelope seal, and a strip of clear tape should be placed over the signature. And this procedure is really important because it will pinpoint accountability if a shortage occurs, because the teller will see that nobody had access to that key because that envelope wasn't open. So if there's a shortage, then it would definitely be that teller's responsibility. loss scenarios really helps to understand what can happen without good internal controls. A real-life situation. As I read this loss scenario and other loss scenarios on upcoming slides, I think about what internal controls that you have in place in your credit union that would have prevented this loss, or what controls you know by going over this that you need to put in place so that you will not have this from happening in your credit union. So the accused in this situation could have been the teller, could have been a head teller, or anybody with access behind the teller area, and this is because of lacks of controls that we'll see. What happened here was the teller did not count cash received from the head teller, left cash in the drawer, his or her drawer, and then the spare keys were accessible to other employees. So let's talk about what led to the discovery of this. A teller requested vault cash from the head teller. Teller signed accepting the cash, but the teller did not count the cash before she placed it in the drawer. And then the teller also left the cash drawer open for short periods of time while in the restroom. And this isn't unusual. The spare keys were kept in the head teller's unlocked desk drawer, not in the envelopes that I spoke about, but on a key ring. At the end of the day, teller drawer was short. So there was lack of accountability because of these lapsed controls. So what should this credit union have done to prevent this from occurring? And what should you do? They should have verified the cash that was received at all times. Anytime cash exchanges hands, it needs to be verified. And the teller cash drawer needs to be locked, even for a brief moment, even to go to the restroom that might take a minute or two. That drawer needs to be locked, and the teller needs to take the key with them. And access behind the teller line, too. So you can see there's a number of ways that this loss could have occurred, and even though it was the teller drawer and she's responsible for that cash in that drawer, other people could have accessed those funds. As I mentioned when talking about currency deliveries and storage, the main cash supply, the vault cash, can be stored under the exclusive control of one employee or forestall control. And as I mentioned, most credit unions are using the forestall control because that's most convenient. And it's unlikely, if it is true forestall control, the two people would conspire to steal from you. All currency distributions and sellbacks should be dated and signed by all parties involved as well. It's essential to create and document an audit trail for any transaction. And again, I want to emphasize forestall control. This simple procedure not implemented has caused millions of dollars in losses in credit unions. It's really important. And I know I mentioned a lot, too, about breaking down the bundles and verifying the individual bills. There was a situation in a credit union, and it was a loss of over $600,000, where the head teller, and there's a number of things that were broken down, the head teller that was responsible for the cash, it wasn't true forestall control, and other people not, no control over the combination. Everybody had the combination, but this teller had like $100 bills on the top and the bottom, but then it was filled with $1 bills in several bundles. So let's talk about a vault cash loss scenario. In this situation, all employees with access to the vault could have done this. The amount of this loss was over $200,000. The vault cash was short, and the camera was disabled in this credit union. So what led to this discovery and what was part of it? There were 5 tellers and 3 teller supervisors, and each one of them had that full combination to the cash vault, the money safe. The credit union policy required 2 employees at all times enter the vault room together, and I hear this very frequently in credit unions. And there was a camera in the vault for security. The camera was found to be non-functioning. Employees can disable the camera, or it could break down itself. A surprise cash count of the vault was ordered, and the vault cash was over $220,000 short. So what should you do to avoid this from happening to you, and what this credit union should have had in place? Implement the forced dual control. No employee should have the entire combination or both key and combination to the vault cash. Now Vanessa's going to do another poll for you guys.
Okay, get ready to choose a button. So now we're going to talk about which vault access system is in place at your credit union. One person has exclusive access. You assumed that you had a dual control, or do you truly have forced dual control, meaning that there is no single person that can access the vault without having that other person who might have either the key or the combination? You might not know, or again, it might be not applicable. Please choose one of those options. All right, let's see how we're coming along with those. Again, so important to
Say, Vanessa, let's
pay attention to these things.
Remind our audience, we're getting some good questions in. We'd like to remind our audience to continue to submit questions that we will entertain at the conclusion of the webcast.
Thank you for that, Catherine. Okay, poll results, and I'm going to push the results to the audience. 49% said you actually really do have forced dual control, so that's great. 11.8% are using the one person has exclusive, and 21.4% assumed that they had dual control. So hopefully now with what Joette has shared with you, you have a better understanding of true forced dual control, and you can implement that. All right, Joette, I'm turning it back over to you to continue talking about teller operations.
Okay, thanks a lot, Vanessa. And I am sorry, I missed the slide there. But I want to talk about surprise cash counts. Unannounced cash counts can help discourage internal dishonesty, so you'll want to make sure that your supervisory committee, your auditor, whoever is charged with that responsibility is doing it without letting employees know in advance that a count is going to occur. Accounts of all cash should be accounted, teller drawers and vault cash. A lot of times credit unions forget about vault cash, and as well, that needs to be verified by a reliable source, a subsidiary ledger or GL account. Cash should be counted by the supervisory member or auditor as well, not the teller. But that teller or whoever's responsible for that cash needs to be present. And I want to go over a surprise cash count loss scenario. The accused is the teller, and the amount is $8,000. And this cash drawer for this teller was $8,000 short. So what led to this? The tellers were always informed in advance of surprise cash counts. And a lot of times maybe it's not just the tellers, but it's like the manager of a branch or the manager. But nobody should be made aware in advance that a surprise cash count is going to occur. But in this case, a teller was in a car accident and had to take sudden sick leave. So her cash drawer was counted since she wouldn't be returning for several weeks as well, and the teller was interviewed by police and confessed. So what should this credit union do? Dual control and verifying cash, both people present, unannounced cash counts, and frequent cash counts. We recommend at least quarterly. Monthly is preferred. So let's change gears a little bit and talk about expense accounts. You'll want to be sure that expenses are approved by the next higher level of authority. You would not want an assistant manager approving the expenses of the manager, who is his or her supervisor. And all expenses should have receipts, some type of documentation. You'll want to be sure you have written expense policy and that policy states authorized expenses, amounts, and then your approval authority. So let's look at this scenario. Many credit unions issue corporate credit cards to staff or volunteers, board members. As I read this law scenario, think about the ineffective internal controls that were either not in place or not followed. So the CEO used the corporate credit card for personal expenditures for nearly a year, and there was no approval or oversight by the board or supervisory committee of these expenses. And a newly hired accountant paid this credit card expenses as requested by the CEO. So, and the unauthorized use was found during an audit of the corporate credit cards by an examiner. The CEO then was questioned and admitted to the theft. So what should have been done, and what do you want to make sure, going back to your credit unions, that you have in place so that this won't happen to you? You want to make sure that approval is always by the next higher level of authority. And you want to make sure you have documentation for all expenses, and then there should be an audit control in place to make sure that the supervisory committee is looking at these expenses or your internal auditor. File maintenance reports. File maintenance transactions can be performed to manipulate an account. Money doesn't have to walk out the door. A dishonest employee may advance the next payment due date on his or her loan, or perhaps a fictitious loan that they set up in the system. Just some examples: an employee could change an interest rate on a loan from 6% to 1%, a payment amount from $600 to $6, an address to one under their control. They could change the frequency from a weekly payment to a monthly payment. So you'll want to go back and ensure that these types of non-financial transactions are reviewed on a regular basis and by somebody who does not have lending authority or transaction authority. You'll want to make sure that employees do not have the ability to perform transactions on their own or family member accounts as well. So that's real important, that the system block employees from performing transactions in their own or family member accounts. So a file maintenance loss scenario. This relates to credit cards. A lot of times I talk about reviewing the file maintenance report, but a lot of times credit unions forget about credit cards. You can perform maintenance transactions there because everybody's really concentrating, of course, because of all the breaches on the external fraud that's happening. But this is a $95,000 loss, and this was due to increased credit card limits. So in this situation, the card services representative resigned abruptly. This had been going on for some time. Supervisory committee conducted a thorough review of this employee's account and found that there were maintenance transactions of increasing the credit limits done on both credit cards for her and her husband. The maximum limit on credit cards in general at this credit union is $20,000, but her limit, she raised it up to $50,000, and her husband $50,000 as well. They were each approved for $10,000. The credit union did request an interview with this person, and she basically had no choice but to confess because of all of the documentation that they had. So what do you need to do to prevent this from happening in your credit union? Block employee and family member accounts, and that should be not just credit cards, anywhere in the credit union, and perform file maintenance review, not just loans, credit cards, because credit card is indeed a loan. Loan verifications. It's really important to review new loan reports, delinquency reports, charge-off reports, and by loan officer, because you want to look to see if there might be a pattern with a particular loan officer. In a post-disbursement and quality review also, you want to make sure that all the documentation is in the file, that it was approved properly. So look at a sample of these, and also cash pay loans. These are usually the type of loans if you have a dishonest employee and they're trying to put a fictitious or unauthorized loan on the system, it will be a cash pay loan in most cases. So, new loan reviews. Fictitious or unauthorized loans cause large losses for credit unions without internal controls in place. As I mentioned earlier, you will want to be sure that the loan officer does not have the ability to approve, process, and disperse a loan. You will want to look at new loan reports, delinquency reports, charge-offs, as I mentioned, file maintenance reports, and look at transactions. You want to make sure that by looking at this information that an employee did not put a fictitious or unauthorized loan on the system. There are a lot of other internal controls that are important as well as the ones I talked about today. We have a lot of resources at CUNA Mutual Group to help you identify these controls, and I just want to speak real quickly about the resources that we have available to our policyholders to help you navigate the risk that you face as a financial institution every day. We have a lot of risk management support through various means. Take advantage of on-site or virtual reviews by our risk management consultants. You participate in our webinars as well. Use our bondability service in your hiring process. Make sure you're signed up for risk alerts that we send you to educate you on emerging risks. If you're a policyholder, you want to make sure that you are using our Protection Resource Center to help you implement the effective internal controls. A lot of things I talked about today, there's a search engine on here, so you can go on there, type in internal controls, and a host of resources will be available to you. There's an online assessment you can take for internal controls. There's white papers, archived webinars, just to name a few. So you will want to be sure you're receiving risk alerts from us. We sent over 70,000 out this year. There are direct links in that alert that take you to resources in the Protection Resource Center. So whatever that alert is about, that's really a good education for you, and follow those links to the Resource Center. I really want to encourage you, if you are a policyholder, to use these free resources. There is no additional cost for this. Risk alerts, the Protection Resource Center, and the bondability verification. I turn it over to Vanessa again.
Thanks so much, Joette. We really appreciate your being on here. We have one more poll question, and we want to get a sense of which resources you're using. Joette just went through a few that CUNA Mutual has, and so we want to find out. So the options are: I log into the Protection Resource Center, I get the risk alerts emailed to me, or I log into the center and get the risk alert emails, or I don't use either. Or finally, not applicable applies if you're not a credit union or you're not a client of CUNA Mutual Group. We know there are other companies out there. All right, so please choose your answer, and I will work on refreshing the results. Let's see. Okay, we've got quite a few. Let me push the results out so we can move it along and hear from Scott. Looks like the most common answer is I get the risk alerts emailed to me. Only 4.9% log into the Protection Resource Center. So, again, she talked about a lot of really great resources there, so I encourage you all to look at those. All right, let's keep it moving along. And there's Joette's contact information. Thank you again, Joette. And, okay, I want to do a little advertisement here. So here's the big announcement about the grants round. So this is the Community Development Revolving Loan Fund, NCUA's essentially appropriated funds to support low-income designated credit unions, okay? We will have our first grant round. It will open on February 2nd, 2015. 2 categories you can request. Money to help bring in a student intern. You can get up to $4,000 for that. Or for training, and that can be training for your board or staff. You can get up to $3,000, but note that there are 3 categories of training we're going to be supporting. It has to be compliance, lending or collections, or business management or software related to business management. Okay, those are the priorities. And the priority will go to those credit unions that tend to be smaller. So it's not that you can't apply if you're larger, but we essentially try to focus the funds on those that are smaller. So if we run out of funds before we get to a larger asset size, then we just run out of funds at that point. Okay? So that's the big announcement about grants. Let's move on, and I'm going to turn it over to Scott. Scott, let's hear from you.
Thank you, Vanessa, and thank you, Joette. Great information, great training. I want to use the remaining time today to share a few observations that I've gathered in observing some common internal control weaknesses from my time as I travel and work in shops, credit union shops across the country. Specifically, I want to discuss these 5 common issues. 1, inactive and/or poorly trained supervisory committees, a weak internal control culture, the consistency or lack of consistency of supervisory committee reviews, the lack of policies and procedures, and poor follow-up on past exam findings. I've included here an example. One of the issues we see is inactive or poorly trained supervisory committees. And it's important for our supervisory committees that they have clear, they receive clear expectations, clear communication, so they know what's required of them, and also to help create a clear vision, a clear outcome of what should transpire. Frequently, I see the credit unions that have inactive supervisory committees. One of the reasons we see that is, I believe, is that the members of the supervisory committee were recruited, as the credit union was eager to get someone to fill a vacancy, but they didn't fully understand what the commitment was going to be. And that's why I like this example, that it's very, very clear. Supervisory committee volunteer should expect to spend 1 to 3 hours a month planning for and attending credit union meetings, including a regularly scheduled committee meeting, monthly board of director meetings, special planning, or informational sessions, trainings, and other credit union functions. This is important because being on the supervisory committee is not typically just a 1 month or 1 hour a month meeting. If they're active and they're engaged and they're also participating in other committees and attending the board meetings. So if you create a clear expectation, it will help you attract the right folks. The second part of that is recruiting and training for the best skill sets. Supervisory committee and volunteers are now required and should have the ability to read a basic financial statement. And this is really important. A reason this might be important for a supervisory committee is as they're looking at financial statements and they see the credit union is starting to borrow lots of money, but the credit union is awash with cash. It may, if they know how to read through a financial statement, something like that or another red flag may appear. They need to have the ability to critically examine and question, and this aptitude is really important because it's what drives a person to dig a little deeper. One experience that I've seen this several times where the CEO or the manager of the credit union had been misusing vacation and personal time off, but no one ever dug a little deeper and thought, why don't we take a look at that account and make sure that it squares and it balances and it fits within policy. Once they did, they found that there was an issue. And I think what really drives that is that aptitude that a person who wants to dig a little deeper, that's really an important part. They need to understand the credit union internal controls, as Joette just explained so well. They need to understand what those controls are and what we do, how do we mitigate our loss. And they need to understand and have training and have an understanding of the applicable laws and regulations. As we all know, Bank Secrecy Act, the board is responsible for the program, and the USA Patriot Act and Anti-Money Laundering Act Well, there are rules and regulations that we need to know, the supervisory committee and board members need to know, so that they can have the proper oversight, so that they know that, for instance, it's more than CTRs or SARs, that how we monitor and track and comply with customer identification or member due diligence is critical. So they have to have an understanding of what laws and regulations apply. Then kind of following up on what Joette mentioned, I see from time to time just an overall weak internal control culture with out-of-date policies and procedures, especially procedures, poor internal operational oversight from the manager. I've seen where employees are thrown to the sharks. They get trained, are thrown to the sharks, and they're responsible for daily reviewing, let's say, an excessive cash transaction log. But they really don't understand what they're looking at, and the manager threw them to the sharks or the wolves, and there was no other follow-up. And I know it's been said that a person has to do something 21 times before it becomes behavior. And so making sure there's good managerial oversight to make sure this training and the things that need to be done, especially in internal controls, as Joette mentioned, are being done. And we just don't write them in a policy and have one meeting and say go, that they really all follow through and reviewed. Overall poor training, a 5-slide PowerPoint isn't enough. It should be ongoing. It should be, Joette's just given an excellent example of what internal control training should look like, and it should be regular. And then, of course, I do see many missed red flags. Separation of duties is more particular. I see this with the smaller credit unions that are trying to balance limited staff, but it goes back to what Joette said of having a zero tolerance for, for having the right controls in place, or if you don't have that, working with your examiner or with your CUNA Mutual rep to identify what are some backup plans, what are some extra audit controls that we can have in place. And conflicts of interest. This one continues to surprise me as I travel around, and I still see a lot of credit unions who have relatives and friends serving in all different kinds of positions, whether it's an employee and a member of the board is a cousin or a closer family member, or supervisory committee members that are related to people on the board and related to people that work, and it creates too many problems, and I think some of it is a carryover from years ago. But if you've got that in place, you need to fix that. That's a problem. Consistency of supervisory committee reviews. Meetings become chat sessions, and for some credit unions, a free lunch. If you buy lunch for your supervisory committee, it's important that they become active, involved sessions, especially after some of the risks we just talked about. Very, very important. It's important that there are written formal plans in place. So, we're not going to tell staff or anyone about surprise cash counts, but the supervisory committee ought to have in its audit program an idea of when they're going to do these things and when are they going to look at the other things and the other issues that need their attention as well. Missed compliance audits, making sure that appropriate audits take place when they're supposed to. I see this with Bank Secrecy Act. A credit union recently, they missed the last 2 years. It was a repeat finding. We finally go in, we do a Bank Secrecy Act audit, and the credit union hasn't had a SAR filing in a couple of years. You drill down a little bit, and you find out that the person who's responsible for monitoring excessive cash transactions doesn't know how to look for structuring, and so you have weakness there, and you have a problem, and it was because of a missed compliance audit. And I see consistency with supervisory committee that are just outdated. The process, what they're looking at, what they're reviewing is outdated. Lack of policies and procedures. I still see boilerplate policies out there that have been borrowed from another credit union. And if you're looking at a policy and you see another credit union's name and your credit union's policy, it destroys the credibility of who reviewed this policy and who really understands what they're doing. And no internal audit to ensure policies and procedures are being followed. Again, it's great to have these internal controls and these procedures and processes written into policy, but who at the credit union actually goes in and checks to make sure that they're being done and that they're consistently being done? Very, very important. Under poor follow-up, repeat internal control findings. I still see those, and the credit unions that I've seen them at, they're just darn lucky. They haven't had an internal or external loss. Very, very important. If someone brings it to your attention as part of your exam, as part of your supervisory committee audit, when it comes up, address it. As those things remain outstanding, for whatever reason, maybe we don't agree with what was brought up, or we have the excuse that we're very busy, it doesn't matter. Those repeat findings need to be taken care of, and we need to make sure that we do so that our operational risk does not skyrocket and lead to a loss. And the final thing I want to leave is, Benjamin Franklin said, an ounce of prevention is worth a pound of cure. It is so important. Nothing is more painful than getting ripped off or taken advantage of, and not just financially. Obviously, some of the examples that we've heard today, who wants to take a $220,000 hit? None of us. But it's more than that. Many times in our credit union shops, we've worked with people for years and decades, and I know from a recent experience regarding some loan fraud at a great credit union. Employee had been there for years, and they had been trusted, and things have been going well. And over time, the credit union started seeing some red flags, and really didn't probably respond to those red flags quick enough. And at the end of the day, the employee, as been mentioned today, took some time off, and of course then people started coming in with erroneous loans and other stuff that happened. And fortunately, that credit union was able to mitigate the financial loss. But it was devastating for them that someone that they knew and they trusted had basically broke that trust. And so that's why having a strong culture of internal controls and following the steps that have been provided for you today, and having that strong culture of controls is so important, so that you not only suffer the financial loss, but also so that you don't put yourselves in that position of having people that you've worked with for decades ripping you off. Vanessa, that concludes my portion. I'll turn it back to you.
Thank you so much, Scott. Okay, I want to thank both of our speakers today, and I'm going to move the presentation forward to show you that certificate that you can get again. Let me push that to the audience. So thank you for taking the polls. That was part of preparing to get the certificate. Also, Franz, I'm going to ask you to push forward because I might seem to be in a circular loop here. If you can push it forward to element, looks like 70. And let's show them the certificate. So again, the certificate will show up after we do the Q&A, or we'll talk you through how to access that after the Q&A. And at this point, I've got a couple more things I want to show you here. Oh, I see, 74. Ah, there you go, 74, okay. You'll find, if you're downloading the slides, there's a couple of more slides in there that talk about OSCUE resources, our newsletter, the Credit Union Service Provider, which is a new resource, and you'll find that on our website under Outreach and Partnership. But we're going to turn it over now to Catherine so that we can get started with the Q&A. Catherine?
Okay, thank you, Vanessa. I'm going to just show this again, the certificate, so that everyone will see. In order to get the certificate of completion, you will have had to have answered, first of all, listen to 45 minutes of this webcast and answer 3 out of 4 poll questions and correctly answer 12 out of 15 of the quiz questions. If you look on your console, the quiz is that, I guess it's a magenta-looking icon, and it looks like a piece of paper with a pen. That's the quiz. The one right next to it will allow you to track your progress. It'll let you know whether you've answered, listened to 45 minutes of this webcast, and whether you've answered at least 3 of the poll questions, and then you're good to go. So we're going to launch right in to our Q&A. Well, I'm sorry, first, I've got to push out a survey to everyone, too. So please, the survey takes only a few minutes for you to do. And then we can go right into our Q&A. And I'd like to make sure my speakers are on the line. Do I have Joette and Scott still there?
Yes,
here.
Joette's on the line. Yep.
Okay, I thought you left me for a minute. All right. So let's start the ball rolling with Joette. Joette, you ready?
Sure.
Okay. We get a common question here, Joette. This is question number 15. It's a common question that we've had, and the credit union says, what is a good practice when you have a small staff, 4 employees, which include the CEO? This is a small credit union.
Well, I think that's kind of like a pretty broad question because it really depends on the internal control that you're trying to implement. Maybe like as I talked about separation of duties. It is important, you know, even though there's 3 of you, to separate the duties. If there is something, though, that you just can't implement because of the small staff, make sure that your supervisory committee, I think that's key, and Scott talked a lot about that supervisory committee is really involved, and they are reviewing transactions and loans and everything that's done in the credit union on a very regular basis.
Okay. So now let's keep you, I have another question for you, Joette, okay?
Sure.
Let's keep you here, and then we'll switch to Scott. So this is question number 16. So the credit union wants to know, actually, did you say that you offer consultations regarding internal controls on site? Did you say that?
Yes.
CUNA Mutual, that is.
Yes, there's a lot of ways that we do it. We go on site. We have risk management consultants spread throughout the country that can go on site in your credit union. We also do virtual assessments. So it really depends. It's important for you to reach out to, if you know who the risk management consultant is, or shoot me an email, and I'll tell you who the person is that you should speak with. Just let me know your name, credit union, and your credit union, and I will get you in touch with that person. And then there are also online self-assessments and other white papers and things of that nature.
Okay, thank you, Joette. So now I'm going to jump to Scott, and then Vanessa, you're up next, okay?
Okay.
All right, so Scott, here's a question for you. The credit union wants to know, do you see many state-chartered credit unions that have changed their bylaws so the credit union does not have a supervisory committee? Question number 121, I'm sorry.
No, I haven't. This is a simple, simple response. Yeah. I haven't seen any.
Okay. Let me give you another question, Scott, since I have you. This credit union, this is question 124. So the manager said, I think, Scott, now correct me if I'm wrong, you were the one that mentioned about getting family members removed from the board?
Yeah.
Is that okay? So the credit union said, is this something that they should do, and if so, how would they go about doing that?
Oh, and that is so uncomfortable. But it's a great question. Here's how I advise it. if it's depending on if it's a board or not, I would any human resource issues or even with a volunteer member, I would review action steps with legal counsel to make sure that you're doing the right thing. The second thing is if it's a volunteer, sit down, getting maybe the executive board involved and the chairman involved, and I recommend the chairman should take for the board side the leadership in this position and have a conversation with the volunteer and just explain that this may not have been a problem years ago, and maybe this particular situation in the past hasn't created a problem but now it is, and it puts the credit union at risk. It's difficult for the board and management to make decisions when these fair decisions when these situations happen. And so I would recommend if it's on the board, if it's nepotism, it's on the board, get the board involved, and I would ask that member to step down. If it's a problem, an employee problem in different positions, then I would get your human resource professional involved, whether it's internally or human resource attorney. But the point is, do it. It just, I don't know, and Joanne can weigh in here if she wants to, but it creates a lot of discomfort, and it really sets, I believe it can set a credit union up to some vulnerabilities.
Yeah.
Do you have any comments on that, Joette?
Yes, I agree with what Scott said. And you probably hear this all the time, but it is really important to get legal counsel involved if you wanted, if you can or you want to do something at this point. But we encourage, because there's an employment practice liability analysis that we do also at CUNA Mutual Group, and we have a lot of great resources with employment practices, policies and steps that you should take. But we recommend that you think about it in advance and you have a, nepotism policy. So you make the decision in advance, how you're going to handle those situations that, if you are going to hire a family member, that there would be controls in place, with those two family members. It's kind of like, I know a lot of credit unions, they won't hire, like a husband and wife, or if two people do get married, then their policy is that one person has to leave the credit union. So I guess what I'm saying in a roundabout way is think about it in advance and put it in writing, and that's the policy that you follow consistently throughout your credit union.
Okay, thank you, Joette. So now let's jump to Vanessa. Vanessa, we have two similar questions, and it involves the grants. Questions 113 and 119. The credit union wants to know, are the grants only available to low-income designated credit unions or are they also available to small credit unions?
Thank you for that question. It's a very good question. A credit union has to have the low-income designation in order to apply for grants. The interface won't even work if you try to open it up. So while we know there are many small credit unions out there that are not low-income designated, unfortunately those, unless you have the designation, you cannot apply for the grants.
Okay. So on the same topic of the grant, question 112, the credit union wants to know where can they go to apply for the grant?
Okay. If you go to NCUA's website under Credit Union Resources, you'll see at the bottom, Office of Small Credit Union Initiatives. That's our office. And when you click that button, you'll get 4 options, and one of them is grants and loans. And that's where you'll find the information. So it's on NCUA's website. And if you want to just sort of do in the search engine maybe grants and loans, you'll probably get it that way also.
Okay. Thank you, Vanessa. Now let's go back to Joette. Joette, we have another question, question number 21. And let's see how I can phrase the question, because apparently the questioner wants to know what kind of internal controls should be used when you have MSRs that can close and open accounts, perform transactions on accounts, take loan apps, disperse funds, etc.
Well, I mean, what was just mentioned, off the top of my head seems fine. They're not, as long as that MSR is not a loan officer. So I'm guessing a loan officer is approving the loans, and maybe the MSR processes it and disperses the check. There's a separation of duties there. I think what you want to just think about is, can a person see something all the way through in their without another individual, being involved? Because there's different transactions, as I mentioned earlier, that could cause somebody from putting an unauthorized loan on the system or a fictitious loan on the system. So with what was said, it seems like that's not an issue.
Okay.
Unless I'm not understanding the question fully. So, and if I didn't answer that question, whoever asked it, my email address is in here. Please, please give me, contact me, and maybe I can ask you some more detail about what your concern might be.
Okay. Now stay on the call, Joette. Here's another question. I think you mentioned this in your presentation. The credit union wants to know what is an FDR check. Question 29.
You know what? I can't see the questions.
So what is a FDR check? Question 29.
An FDR check.
Yeah, I don't know what that is either. Did you mention anything like that in your presentation? I don't recall it.
You know what? I apologize, but I don't recall.
Okay. Well, let's give you another one. Let's give you another question, Joette.
Okay.
So here a credit union wants to know, is there why isn't there a central database to verify whether a potential employee is bondable with all bonding companies? They want to know that.
Yeah, I believe
Question number 32, I'm sorry. Question 32.
It's really for, privacy reasons. I mean, we can't get information from another insurer, and we can't give out your information to another insurer, So it's really privacy issues. And we have a large database. The database has been ongoing for about 30 years now. So, it's a huge database of individuals that aren't bondable. But I guess the short answer of your question is, privacy and legal issues.
Okay, stay on the line, Joette, because someone gave me some clarification on that FBR. They said maybe they mean FBI check.
Oh, okay. Yes. Okay, yeah, I'm thinking, because sometimes it's hard to remember. Yes, FBI fingerprinting. What I mentioned is anytime I talk about, employee dishonesty and prevention methods, it really starts with the hiring process. And one of the things we recommend in the background check is FBI fingerprinting. And you can just, Google that and get the information on how you would go about doing it. And I don't believe it's expensive at all.
Okay. So now I have a question for both you and Scott. This is a pretty good question. Get your opinions on this. Question 157, credit union says, can the accountant and compliance officer be the same person?
I can't think of any. I can't off the top of my head think of any reason why not. I think without knowing their duties, though.
Right.
It really depends on their individual duties. Is there something that, needs to be separated, that one person should not be doing? It's difficult because some of these questions, you really need more detail in order to answer them. So it really depends on, you'd have to compare the job duties.
Right.
Okay. You think same thing, Scott?
I agree with that. Yeah. And I do in smaller shops, mid-sized shops, I will see where a person will have those two duties.
Yeah.
And what I might offer, and maybe it doesn't, it doesn't relate to this at all, but you would think an internal auditor should never have transaction authority, and you would think that's a given, but I've been in a lot of credit unions, and the internal auditor had some type of transaction authority because they're doing the checking. if they had transaction authority, it's like who's checking the checker. So just thought I'd throw that out.
Exactly. Okay, let's throw the ball over here to Scott a little bit. Scott, this is question 128. So the credit union says, should a credit union supervisory committee give full responsibility to an external auditor to conduct an audit?
How I respond to this is they can delegate the responsibility to, for someone else to come in and conduct an audit, but the supervisory committee and the board, there's certain things you can't delegate delegate away, and that's your responsibility for the safety and soundness and fiduciary responsibilities that you have for the credit union. So yes, you can select someone to come in and perform the audit, but I believe you need to be, you can't just walk away from it. You have to make sure that it's followed. You have to make sure that it's thorough. You need to make sure that the information is actionable and that you follow up on it. So you're still responsible for it, but you can bring in expertise to help you complete it.
Okay. Can I add something to that, Catherine?
Sure.
It's a great opportunity for me, again, to talk about the Supervisory Committee series that we have on YouTube. And in that, you'll find one of the modules talks about what are the requirements for the annual audit. Depending on the size of the credit union, you may need to get a CPA at the higher end, and at the lower end, it could be that the annual audit can be completely done by the internal supervisory committee, or it can, like Scott just talked about, you can delegate it out to a consultant. So just wanted, again, to put in a plug for that series. It's a great training.
Very good. Well, stay on the line, Vanessa, because the next question is coming to you. Since you mentioned our supervisory modules, the credit union wanted to know, question 27, are they less than 3 minutes long each, or what?
So they run from, I think the shortest is about 4.5 minutes, and the longest is about 8.5 or 9 minutes.
Okay.
And they can be watched at any time. You can, do a couple, do one, and then come back the next day. But, yeah, really easy to get through.
Awesome. So now stay on the line, Vanessa. Don't go away.
Okay.
So now another credit union is interested in finding out, question 151, is it difficult or time-consuming to obtain a low-income designation?
Okay. So, and here's a plug now for all of the webinars that we've done in the past 2 years. We did 3 webinars all about the low-income designation. Back in, I think it was 2012, NCUA automated the process such that annually when your examiner comes in to do a full exam, your address data is used to determine whether or not you could qualify for the low-income designation. If you qualified, you would have been notified by NCUA that you were eligible for the designation, and the letter would have said, do you want the designation? Because we don't give it to you unless you want it. So if you did not receive that letter, then the data that we used does not prove that you are a low-income designated credit union, meaning, and the criteria for that is that more than 50% of your members need to meet the low-income definition. The software that we use for that goes through quite a few calculations, essentially to see if your members are assumed to be earning less than 80% of the area median family income. So all of that is to say, it's not a long process if you qualify because, again, you get that automatic notification. If you didn't get the automatic notification, but you believe that you might qualify on some other criteria, maybe the data is inaccurate or whatever, then feel free to follow up. The Office of Consumer Protection reviews those applications, and they can help you with an alternative analysis. And you can find their information online. If you have any trouble, feel free to contact me at vlowe@ncua.gov.
Thank you, Vanessa. Now I have a question for both Scott and Joette. This is question 145. So both of you can chime in on this question. The credit union wants to know, what should a review of employee account activity look for? What should a person look for?
Oh, I can start with that, Scott. You would want to look at large deposits, like red flags, like large deposits, and research it to see the origin of it. Was it a legitimate deposit? It didn't come from another member. Also, you want to look at transfers into the account to make sure that they came from a legitimate source. Look over the checking account for kiting. Look at the loan information, that it's the right percentage rate, the loan's being paid according to policy. Those are some things, right off the top of my head. But thanks for bringing that up, because that's an excellent question, and that is really important to do, either by your supervisory committee or by your internal auditor, and on a regular basis. There's a lot of frauds that can be cut short because there's something in that employee or their family member's history or their lending that they could detect a fraud in the early stages if that's done.
You, Scott?
Ditto. Amen. You heard it from the best.
Okay. All right, so here's a question for both of you again. The credit union, I know Joette talked primarily about this, but Scott, you can chime in too. Question 173, do you recommend cash counts be done on all branch drawers and vault on one given date or random different days?
No.
Also,
go ahead, I'm sorry.
No, that's okay, because the question should be up there, or you should see it up on the board.
Okay. Yes, it is important to do all cash containers, but it depends on how large your credit union is. It definitely can be done at different times. There's definitely not a problem with that. It just makes sure that, like, if you're doing it on a monthly basis, that each container does get done monthly. But no, it definitely does not have to be the same time. A lot of times, credit unions forget about that vault cash, and we've had so many losses with the vault cash. So I really just stress that, make sure all cash is counted, but it definitely can be different days.
Thank you, Joette. Did you want to add in anything, Scott?
Yeah, I just agree with what Joette has said. She's correct.
Okay, well, here's something that you can answer, Scott, directly.
Great.
Question 172. The credit union wants to know how they can get their supervisory committee more involved. And since you're a consultant, Scott, I'm sure you deal with this all the time.
Yeah. One, so let me start at the higher level. When you're recruiting, I think it's important to recruit people who believe in what you're doing. And, that maybe there's an affiliation with the credit union, and maybe they've been a member for years, or maybe you've worked with someone in the community and you build a relationship with them. It's important to get that activity, that there's a drive there. That they really see their role as supporting and participating. Then really good training and really clear expectations, so that they know. People, I think, for the most part, want to know if they're performing or not. And if they're lured into helping and being on the supervisory committee, and they don't know that they're going to be meeting monthly or this other stuff, we don't want to surprise them. And also look for groups that where there's a tangible benefit. I see opportunities in reaching out to young professionals who are looking to build resumes, and especially some of the older millennials. I see that they bought into the co-op principle, and I've seen some of these younger millennial or older millennial professionals really excited about their opportunity to serve on the supervisory committee, and I find that they're active and they're engaged. So I hope there's a couple of things. I hope that helps.
Okay, that should. Sounds fantastic. I want to remind our audience, those that may be in the process of taking the test, if you have any technical problems with the test, please email Trejo, Trejo, at ncua.gov. That's Oscar, and he'll try to help you out. So if you're having any technical problems, Trejo at ncua.gov, okay? So we're going to try to do a couple more questions before we run out of time. So let's see if we can give the comm back here to Joette. Joette, there are a lot of questions about getting CUNA mutual risk alerts. Who are these available to? This is question 107.
Okay, they're available to anybody who's a policyholder. And you can have the risk alerts sent to an email address, and then also the risk alerts are housed in our Protection Resource Center that you can access the most current one to all the other ones that we've sent. So you would have full access to that. So you can contact me, or you can contact our customer service line. You can talk with your sales rep. Anybody at CUNA Mutual can get you signed up for that.
Okay, fantastic. So this is going to be my last question for both you and Scott. The credit union wants to know, this is question 102, how often should you review the file maintenance reports?
Well, we always use the word regular basis, but it is important. And if you can, it depends on your credit union. Like if you can get a report customized to especially the items that I talked about, the red flags, it'll be easier to review that. But you definitely want to have somebody that is doesn't have transaction authority or lending authority review that. And I would say on a monthly basis. And again, it really just depends on how large your credit union is, how many transactions. If you're a smaller credit union, you can review that. You can review every transaction, but look for those, critical transactions that I told you about. And if you're a larger credit union, see if your data processing system can customize a report for you with that information in it.
I agree with that, with the monthly. One thing I'd throw out, and I've seen this happen, is those file maintenance reports print out, and before you know it, depending on the size of the organization, they're 2 or 3 or 4 inches thick, and then you save it. You wait too long, and then reviewing through it, I think people get rushed. And so make sure that, as you said, Joette, if it's a smaller credit union, have that print up daily and review it real quickly and initial that you've reviewed it. If you're going to do monthly, which is great, make sure that regardless of the size of those transactions and the changes, that enough time is spent going through them thoroughly.
Okay, thank you, Scott. Vanessa's going to end us out by answering the question, number 114. Credit union wants to know, where can they get more information on training grants?
Thank you, Catherine. And it's a great question, exactly, because I hope people are gearing up for the February 2nd opening of our 2015 first round of grants. The NCUA's grants are found on our website, the Office of Small Credit Union Initiative. And again, that's under Credit Union Resources and Information, where I think the bottom entry there, when you open that screen, you'll have 4 options, and one of them is grants and loans. So to learn more about the training grants or any of the grants, remember that you should always read the guidance. So on that site where you'll see the grants, and you'll see one of the links will be the application. Before you click on application, which is essentially the interface to submit the application, you want to read the guidance. And I think that's about 20 or so pages, and that describes the criteria for getting a training grant. What you'd have to submit, what kind of training you can apply for, things like that. All right, I hope that's helpful.
That is. Thank you, Vanessa. Well, we're out of time. We thank everyone. We thank our fantastic panelists, Scott and Joette. Joette is from CUNA Mutual. Scott is with your credit union partner as a consultant. Thank you so much. We thank you all for letting us have a wonderful year at doing these webcasts. We look forward to 2015. We're going to open up the year in 2015 with a blockbuster webinar, Successful Strategies for Field of Membership Expansion. That's January 21st, 2 o'clock Eastern Time. Don't miss it. Everybody have a great afternoon. Have a great rest of the year. We'll see you in 2015.